All right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Tuesday morning Inner Circle live session. I'm your host, Ryan Carthage. We'll be joined shortly by my awesome partner, Mr. Benny Allen, and Ms. Casey Jackson. I hope everybody had an awesome weekend in the United States. Hope you guys had a happy holiday yesterday. We got a lot to catch up on this week. So we're going to dive in. So as always, let's turn off all distractions, prepare your minds and your bodies to engage as you guys always do. And for the courtesy of everybody on the call, please ensure that your mic is muted if you're not actively asking a question or making a comment. All right. 1 second. All right, so we'll take a look at Forex Factory first, then we'll take a look at trading economics, and then we'll dive into some charts. All right. And if everybody can see my screen, drop me a 1 in the chat and we will get rocking. Perfect. All right. So just to get caught up on what transpired yesterday, we had German preliminary CPI came in above expectation on Monday. Then we had here, we have French PMI, right? Coming at or just below expectation, coming out of the Eurozone, right? Then we had German unemployment come in below expectation, or the unemployment change, sorry. Then we had this news right here, which is big for the euro, right? CPI flash estimate and core CPI came in above expectation. So, and the Italian preliminary CPI came in above expectation. So what does this mean? There's more pressure being put on the central bank to raise interest rates because inflation continues to press higher, right? So this news was big this morning, okay? We have Governor Board Member Zerberg speaking today, coming out of Switzerland for the Swiss franc. We have Canadian GDP month over month coming out at 8:30 today. And we have consumer confidence for the United States coming out at 10 o'clock. And this evening we have the Australian GDP, which is going to be some big numbers coming out of Australia, out of the down under. We want to keep our eyes on. Then tomorrow we have unemployment rates for the euro, PMI numbers for the euro, and we have the Canadian dollar rate statement. Okay, Canadian dollar rate statement. Also going to be important for us to watch coming out of Canada. We also have job openings for the United States coming out as well. Also tomorrow we have FOMC member Williams and Bullard speaking. So their insight on the Fed's guidance is going to be interesting to hear coming up tomorrow as investors are starting to weigh what the future of the rest of the year looks like from a monetary policy perspective. Then on Thursday, we have ADP non-farm employment change, which is preliminary to the Friday report. That'll be there on Thursday, and unemployment claims for the United States. Also, we have FOMC member Mester speaking as well on Thursday. And then Friday, right, always what we're looking for, first Friday of the month, is non-farm employment change, unemployment rate, and average earnings for the United States. These are going to be big numbers as well for us as we move through this week. So we'll keep our eyes peeled on those those reports as we move through. All right. Over to trade and economics. We're going to start right here. Dollar index rose to 101.5 on Tuesday, but was still set to end the month lower as investors reposition for the possibility of a slower pace of U.S. interest rate hikes, and as fears over global recession have somewhat receded. The Fed preferred core PCE index slowed to 4.9% year on year in April from 5.2 in March, a still elevated level that nonetheless indicated the price pressure could ease a bit. In theory, U.S. consumer spending also rose more than expected in April, which shows that the economy remains robust despite price pressures. Investors have scaled back forward guidance about the Fed rate hikes amid hints that the central bank might slow or even pause its tightening cycle later this year after raising interest rates aggressively over the next 2 months. Meanwhile, analysts noted that there was no assurance that the Fed would pivot away from aggressive pace of tightening given the uncertain economic conditions. All right. So that's going to be interesting for us to continue to follow, is how investors take the guidance and how the Fed moves, seeing as they gave that forward guidance last week. All right. Other news, big news coming out of the Eurozone. Oil prices rose almost 2% on Tuesday, with WTI crude approaching $120 a barrel and Brent crude trading around $124 a barrel, and closing on the highest level in 14 years after the EU reached an agreement to ban 90% of Russian crude by the end of 2022. 6 months. Also, demand is expected to rise shortly after China eased coronavirus curbs. Considering the May month, oil is up nearly 15%, a sixth straight month of gains. So, good people. We've been talking about this oil thing for a while, and it's just been consolidating. That's why you hear Benny say all the time, we can't control the market, right? But we have our risk management intact, right? Will allow the market to do what it does, right? And you'll get, at some point, there'll be a catalyst, a fundamental catalyst that'll push the market in one direction or the other, right? Now we'll take a look at oil and see what it's done, but it's rising. It's rising as we anticipated, right? So that's big. That's big. So Canadian dollar, folks that are trading oil, been sitting in it for a while. It's on the go, right? Now this 90% basically is all oil received by sea, right? Anything that's shipped in by sea from Russia, they are cutting off by the end of the year, right? So they gave all the European nations six months to make their shifts. All right, we'll read some other articles that give us a little bit more insight in this, but I gave them 6 months. Now, the oil that's received by pipeline will still be intact, right? So that's the remaining 10%, which is still going to be interesting to continue to follow, because if there are any issues with that supply, that could cause major concerns for European nations, right? Now, other nations are working to help provide oil supply for Europe, including the United States. So we'll see how that continues to work. But the supply shortage is there, okay? So we'll continue to monitor. European stocks traded in red on Tuesday, with the DAX falling nearly 5%, 0.5% amid renewed concerns over the need of aggressive interest rate hikes to fight stubbornly high inflation. Fresh data showed inflation rate in the euro area accelerated to a new record of 8.1% in May. That's the report that we just looked at. Above market forecast and 4 times higher than ECB target of 2%. The central bank is expected to announce the conclusion of its large-scale asset purchases and confirm plans to raise interest rates in July when it meets next. At the same time, EU agreement to ban Russian oil imports sent oil prices higher and will probably push the CPI even higher. So core CPI, I'm sorry, just overall CPI numbers, consumer price index. Still, raising borrowing costs will probably weigh on an already fragile economic recovery. GDP growth in France was revised lower to show a 0.2% contraction for the first time in for the first 3 months of the year, while Italy, the GDP was revised higher to show a small 0.1% gain. All right. Eurozone inflation, annual inflation rate in euro, which you saw, 8.1% in May, fresh record high from 7.4% in each of the previous 2 months, and well above market forecast of 7.7. Preliminary estimates showed energy prices continue to record the biggest increase, 3.9% versus 37.5 in April. Although there's a widespread price increase, including for food, alcohol, and tobacco, 7.5%, non-energy industrial goods, 4.2%, and services, 3.5%. Excluding energy, inflation accelerated to 4.6% from 4.1, right? Still pressing higher. More than double the ECB target of 2%, right? And a sign price pressures in Europe remain elevated and have not peaked, which they were talking about last month as things looked like they were trying to get stable. Strengthening the case for the ECB to start raising borrowing costs, right? There's tons of pressure on the ECB to change interest rates, okay? And to raise interest rates, right? UK consumer credit. No, that's not the one that I wanted. That's it for now. If you guys get a chance and on Trading Economics, click on this news tab and just scroll through some of these articles, right? Tons of articles from around the world, but start to give you some insight on other things that are happening around the world, right? U.S. futures fell nearly 1% on Tuesday amid mounting concerns over rising inflation and the need for more aggressive interest rate increases, right? So there's this back and forth happening, right? If the Fed does choose to stop raising interest rates at the end of the year or slow down, does that mean that they'll be even more aggressive at the beginning, 50 to 75? After Eurozone inflation rate accelerated more than expected in May, showing no signs of peaking. At the same time, oil prices are approaching 2008 levels again, as Euro agreed in principle to ban most of its Russian oil imports, putting further pressure on general price level. Markets in the U.S. were closed on Monday for Memorial Day holiday. Last week, the 3 main averages booked strong gains as solid retail earnings, robust consumer spending, and slowing inflation reports for the United States lifted sentiment. This week, all eyes will be on payroll report due on Friday, while more corporate results and guidance will be provided, will provide further clues on the economic outlook. All right, so that's what investors are looking at, right? The non-farm payroll numbers on Friday and some of your stock numbers that come out later this week as well. So, but read through these articles. There's tons of information here that will help give you insight overall on the market, where it stands, and how things are moving so that you can continue to strengthen your understanding of the fundamental side of this game. All right. So super key there. All right. Look at the risk sentiment, right? We inched our way below, right? That 20 mark. We're sitting at 17.7, still a little elevated, but we're tracking down as of right now. Okay. Tracking down as of right now. So we'll continue to watch that and see how things continue to move from a risk sentiment perspective. All right. Benny, good morning, bro. How you doing, man?
Good morning, Ryan. Good morning, everybody. Doing great, sir. How was your holiday?
And the holiday was good. The holiday was good. A lot of cooking, a lot of time in the yard. Got me a nice little nap on the patio. I mean, on the deck, so it was good.
Absolutely. Absolutely.
How
Definitely
was
enjoyed it.
Good.
Oh, man. And just good time with the family. Enjoyed the downtown. Hot.
Heck yeah. Heck yeah, it was. All right. You got any thoughts on things from a fundamental side, fundamental perspective, bro?
Oh, no, man. You nailed it. You covered it thoroughly, man. Leave it right there.
Leave it right there. No doubt. All right, so let's take a look at these charts. So what I am in the process of redoing my charts, right? Just to give us a fresh reset. So if there's some pairs that I haven't completed yet that have old markups, we're going to clear those out and redo them. Should be done by the end of the day, but whatever we look at today, we'll do fresh markups on. All right. So let's hop back and let's take a look at the DXY, and let's take a look at oil. All right. So let's clear this thing out. Let's start from the top, work our way down. All right. So here on the monthly, what I'm also doing is I'm making a slight shift to how I mark up my charts. And I'm moving away from using the zones to using the lines to see if I can just clean things up a little bit and make things a little more simple to follow. So that's what you guys will see this morning. All right. So monthly perspective, right? We mark out our highs and our lows. We use wide lines and not zones. What I wanted to see is if it'll make my charts a little cleaner and a little easier to follow, right? As I'm showing, I know you guys are used to seeing that. Just recently, as I've updated my charts over the quarter and each month, because I don't remark them as much as I did, I add new levels, it's become a little cluttered, right? So I'm looking to see. So it's a test for me. We'll go through the month and see how things look and see how things feel. If it's not comfortable, if I'm not able to get used to it, then I'll go back to the zones. But if I'm able to make things a little more simple for you guys and for myself to see as I continue to add updates, then we'll stick with it. So we'll see how it goes. We'll see how it goes. You guys get to follow me on this journey of exploration to see how this change works. It's new, it's different, so it might take me a minute to actually get used to it, but we'll see. Right. So we got our monthly levels here, right? See, price came down and pushing up, trying to get back to this previous high at on this scale, 12,954. But pushing up, and we're getting this reaction, this retracement now, right? From a monthly perspective. So as we go down to the weekly, right? Zoom in just a little bit. You see we got a new swing high on the weekly that's formed after last week's candle closed, okay? So we'll get our weekly levels in here. Weekly support, whoops. Weekly support, like so. All right, just these just a little bit. There we go. Like that. And like that. All right. So those are our weekly levels. Okay. This new weekly swing high is going to be key. Gonna be key, gonna be key, gonna be key. So let's drop down to the daily. Do the same thing, same thing. So, all right, this is that weekly high. Push down. Let's get our daily levels. All right. And slight adjustments here. Like so. And then like so. All right. So we got our monthly, weekly, and daily levels in. Okay. So now from a support and resistance perspective, just looking at that, right? We broke through this daily level, came back, retested, and we had a nice strong push, right? Created a new swing high on the weekly, strong press down. Now we see price trying to turn around and push to the upside, right? As investors are trying to figure out what's going to happen, right? Are we going to see a more aggressive Fed up front and for them to taper off and potentially stop at the end of the year? We'll see, right? But we got rate statements coming in. We also had, right, the inflation in the Eurozone, which could be a signal that the thought of inflation topping out isn't actually doing so. Okay, so we'll see. But right now we got price pressing from a daily time frame perspective, price pressing to the upside, right? Strong bullish candle on the daily, right? So we'll see how the day finishes out. But that's where we are from a support and resistance perspective. So we'll zoom out and now we'll drop our fibs onto the chart. Bang. So from a Fibonacci perspective, this is where we sit. Shallow retracement, push up, came back down, couldn't break out to the upside, pushed down, right? Didn't fully break out to the downside either. Now we'll see if we get a press back up. So one of the things I'm going to be looking for here, right, is if we get a crown pattern here over the next month or so on the daily time frame, right? And we get price to come back up to retest these higher levels. And then we see price push down depending on, right, what the catalysts are later on in the month. So this is something I'll keep my eyes on. Not saying that it will happen, but I'll continue to watch to see. Okay. So that's one thought that I have, right? So we have price pushed down, broke a trend line, pushed up, took out the previous high, pushed back down, and immediately took out the previous low. Right. So now will we see this action happen? Is the question that pops into my mind. Okay. So that's where we are on the daily time frame, 236 retracement. The other option here, right, is does price push higher and come into this 118, 127 zone and make it to this monthly resistance level? That's the other option. Crown pattern potential, or we get a push into the 118, 127 zone. Okay, so two potential options there from a daily time frame perspective. We'll keep our eyes on to see. As we go down to the 4, let's take this out. Let's drop down to the 4. All right, and that's that look to the downside. We'll come back and we'll drop our fib from the low and see where it gets us. There we are, right? So on the 4, we got price to push into the 118 and 127 zone, and price came back down. We got a 50% retracement on the 4, right? So we shall see. Now, if we look at this move to the downside, which we'll look at on the 1, but if we drop our trend lines here, trend line break, and close, retest, and now we're pushing, right? So DXY currently pushing to the upside. currently pushing to the upside. So dollar pairs, you can look at the potential for these retracements that are likely occurring when you get to your lower time frames, okay? Which we'll take a look at there. So that's the 4-hour look on the DXY. And as we drop to the 1, we'll keep that trend line on. Reese, no, I don't use 4-hour levels. I stop my support and resistance at the daily time frame. Reason for that is those are stronger levels, and price is more likely to hold at those levels than the 4-hour levels. So I stopped using 4-hour levels probably, I mean, it's been about 4 or 5 months now, right? So
yep, about that long.
Yeah. So I just look at those daily, weekly, and monthly levels. And as price approaches those, with key Fibonacci levels, whether it be B boundaries, new B boundaries, 118, 127 zones, after shallow retracements or deep retracements, those are signals for me at key levels and strong zones of support and resistance that we could get U-turns. So cool deal. All right. So on the one, right, price pressing to the downside here. Price pressure to the downside. So if we map our field from the top to the bottom, this is what we had. Shallow retracement, price pushed down 118, 127 zone, couldn't get to the D extension. And then we got that trend line break, right? So now price is pressing to the upside. So this kind of plays into that thought that I had on that potential crown pattern if we get a deep retracement here on the 1 hour and the 4, right? Price press down. If we get a nice deep retracement on this fib, 78686 levels, right? Foresee your right tip, and then a potential move to the downside. Okay, so if that occurs, if price stays within this AB boundary, that's what we could see. Okay, so that little more detail on that thought there that I had when looking at it from a daily time frame perspective. So pressing to the upside though, right? So this is where we are. Price is retracing on the 1 hour and the 4 hour on the DXY. So we'll look for potential short opportunities on dollar crosses. So dollar being the counter currency, right? And bullish action on the dollar being the dominant currency. Okay. So we'll keep our eyes peeled there. Any questions on this DXY and that overall look? Looking for retracement to happen like so. Oops. No questions? Cool deal. All right, let's take a look at oil. We'll do a fresh markup on oil as well. We'll take a look at the old markup to see what we had, right? This is what we had. This is what we're looking at, right? Price moving to the upside. Price moving to the upside. Let's turn that off. There we go. Right? So we said we're looking for price to get back to this daily level here, right? You see this red line, price pushing back to this daily level. Let's see how it responded from there. We got a break of that level, right? So now we got a new AB boundary. Whoops, we got a new AB boundary. So we're going to clean this up, take a look at it, fresh look, but pushing back to the upside, right? Broke out of the previous resistance zone that it was in to the upside. So let's clean this up and let's give it a fresh look. Ooh. Look at that. Monthly time frame. Strong push there. Strong push there. So support and resistance levels, we'll drop those in. Okay. Now, new folks on the call, right? If you have questions about my process, please don't hesitate to ask. please don't hesitate to ask, right? You'll see myself and Benny go through similar processes as we do markups. The reason I'm doing it this week is we're at the end of the month. I did not refresh them at the end of the quarter. So with a fresh month and with me desiring to see how things look with a different perspective with the lines instead of the zones, right? Generally, the end of the month is slower, right? Especially with us being at the last day of the month. I wanted to go ahead and refresh things so I can have a fresh look coming into a new month. Okay, so that's our monthly support resistance levels. We'll drop down to the weekly. All right, change that to blue. Whoops. There we go. Okay. Support here, support resistance there. Good. Okay. All right. So now so look, right? This is that range. Price pressed down to this weekly support level, pressed up, right? Pressed down and pressed up. So that's that range that price was playing in on the lower time frames, right? Created a weekly support here, right in line with the previous zone of consolidation, and came back and retested the strong bullish move, right? Came back, took back the majority of that move from a weekly time frame. Now we're pressing to the upside. Okay. So let's go to the daily. Let's get our daily levels in, and then we'll take a look at it from a Fibonacci perspective. All right. So daily, here we are. Support, 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 support. Okay. Slight adjustments. Okay. All right. These are the swing lows. Swing low, swing low, swing low. 2 candles to the left, 2 candles to the right. Right. So folks, that when you're doing your markups and you say, oh, it's getting cluttered, right? You don't want to mark every single one, but the most relevant and the most recent swing highs and swing lows, right? So you got this was a weekly level, swing high, right? A recent level that hasn't been broken yet. And then as you're coming down, you don't have any other swing highs yet, right? These previous swing highs have been broken, okay? They've been broken, right? So now we're looking at support levels. Support level, support level, support level, support level, support level. So what you'll see, right, is you'll get price at some point to reverse and give us 2 candles to the right, right? That'll give us a new swing high, right? And that'll give us a new level of resistance that we can track, right? But until we get that, right, this is the next critical level that we're watching because these previous resistance levels got broken, okay? So now price is pushing to the upside, okay? So that support and resistance monthly, weekly, and daily, all right? So now let's zoom back out. Let's drop our fibs on. And let's see where we are from the Fibonacci perspective on the daily time frame. This will help give us our bias, right? Our overall bias on oil. We got an 8.6 retracement, right? Nice deep retracement, 8.6 level. Matching D extension is here at 136.80, right? 136.80. So we want to see, right? Do we get price to push to the matching extension level? Okay, we got to break through this weekly level first. Even though those previous highs have been broken, why still not include them for a possible retest of those levels? We could get that, right? And if you want to include them, you absolutely can. If I get a retracement, right? If price pulls back to these levels, oops. If price or when price pulls back, if it does come back to these levels, what it'll also do is give me a swing low, right? It'll give me a swing low and that'll give me a level of support. Right. And for me, visually, I see these are swing highs, right? Previous swing highs and previous resistance levels. So I know that price could stop at these levels, right? But we'll look for me on the lower time frames, I'll look for swing lows in these zones, right? And then that'll give me a new support level right? And my new resistance level would be up here like that. All right. So, but you absolutely can, right? If you want to put those in, but my goal is to keep things clear, right? And for me, when a level gets broken, and I reset my charts, that's no longer a recent and relevant level, right? Because it's been broken. So I'll wait for a swing low to form and a new swing high to form. So that'll give me my support and resistance levels there. Okay. All right. So now, right, matching extension is here. Okay. So we'll see how price responds at some of these higher levels as things move forward, especially from the EU. All right. So that's the daily look. Bias is bullish. Bias is bullish. This was that range that we were playing in, right? This was that range. Originally, it started here, right? Expanded to the top of that range there, right? And we're getting a break out of that range now, potentially, okay? Getting a break out of that range. So now we'll see if we continue to get that rise. We could get to Reese's point, right? Pull back, retest the top of that range, right? And then get a push, right? We could get a continued push up, okay? So, but bullish overall is the sentiment, right? Next level being 136. If we break through this weekly zone, we could get a retest and then a continued push, getting to these 150, 160 levels as we've been looking at and watching for the past few months. Okay. So that's the daily time frame look on oil. As we get down to the 4, right? This is that range that's been playing, right? See that? Just sideways movement in here. We finally got a breakout, right? Finally got a breakout. So we drop our fib. Actually, let me go back for 1 second. I don't believe it comes back this far, but we shall see. I think it got taken out. No, it didn't. Okay. So on the 4, this is our active fib, right? Similar look to the daily, right? Except here, we only got a 618 retracement, right? 618 retracement didn't. I did. It got to the 786 level right here, 786 level on this push down. So we're tracking to the upside, matching the extension at 124, which we're getting pretty close to now as we get into the 120 level. Okay, so we got this zone like this, right? 136 was the daily matching extension. 134 is the 4-hour extension, right? All within this weekly zone, right? This is that weekly resistance level. Price is could potentially play around in here as we get closer to these matching extensions, okay? And this weekly resistance level. So this is going to be the next area for us to watch as price moves in, okay? So we'll watch that there. So we'll leave it like that, okay? So that's the 4-hour perspective, bullish, right? 4-hour perspective is bullish. So now as we drop down to the 1, back to what we had, because we had this sideways movement, those fibs got taken out. So we're here. No, not there. Not there. There. All right. So this is where we sit. This is our active AB boundary on the 1-hour time frame, right? New AB boundary outside of that consolidation zone. And we'll see if we get this retracement to happen. We come back and retest, potentially give a shallow retracement, right? And then we could see price just continue to elevate, right? Continue to elevate. So that's oil. Bullish bias, broke out of the consolidation that we were in for quite some time. And now we're moving up, headed to the next weekly level and potentially the matching the extension on the 1-hour time, on the daily time frame around 136. Okay. So that's oil. Any questions? Desi's with me on that. Cool deal. Desi's been tracking tracking oil for quite some time.
Yes, sir.
Finally getting that push. All right, cool deal. No questions. Let's take a look at yesterday. Benny posted for dollar Swiss. We had dollar Swiss, Aussie Swiss, NZD, JPY. So we'll take a look at those, and then we'll see where that gets us. All right, so dollar Swiss. All right, this is my previous markup here, right? We'll pop out and do a fresh one. But, right, Benny stated, wait for, this is on the 4-hour time frame, wait for a swing low and trend line break, right? Through the lowest point. That's a little tight. Take that out. This is going to be my trend line here, right? It's moving sideways through it right now. Love to see we did get a nice strong bullish candle there, right? But I'd like to see a stronger break of that trend line there, okay? But, excuse me, let's clear this out. Let's do a fresh markup and we'll take it from the top. All right, so we'll zoom through this, support, resistance, monthly. I use black for my monthly, blue for my weekly, red for my daily, okay? In case you guys wondered. Bang, bang, there, 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 and there. Okay. These are those monthly levels. Get them adjusted. Oops. Like so. Okay. And there. All right. So that's our monthly. Drop to the weekly. So here on the weekly, right? Here on the weekly, we don't have a swing high yet, right? This blue bearish candle, right? The wick is the highest point. So we don't have an official swing high yet, right? If price finishes the week lower, which it could, then our new swing high will be here. Okay. It's not our official swing high yet. The current levels are here. Okay. So we'll mark these out as the current levels as they stand because we don't have a new swing high yet. Right? On the lower time frames we do, but on the weekly we don't. All right. So those are our weekly levels of resistance. Price broke through them, but we don't have an official swing high yet. This is a level of support. Level of support. That's our monthly level, so we'll leave that as is. Let's see. We'll do this. This is the monthly support level there. We'll do a weekly level here. So, okay. There we go. All right. Like so. Price broke back through those. I'm going to change this. I'm going to put this as our resistance level there. Right. So that this is likely going to be our swing high. So I'm going to put this as a weekly level. And then I'll get some of our other levels on the daily time frame. Okay. So let's go down. Whoops. Okay. So let's go to the daily time frame here. All right. So this is where we sit. There we go. there. All right, so from a daily time frame perspective, right, we got two levels up here, level up here. Then we have support level here. And a couple levels down here. If we get back to this point, we shall see. All right, so that's from a daily perspective, right? So support and resistance in like that, right? Another level here. Okay, so overall, price has been bullish, right? Strong push to the upside. Okay, we're in consolidation for a long time, still making its way up, but then we got the strong move, very little retracement. Now we're getting a retracement, or we've gotten a retracement to happen, right? So now we want to see if we get price to turn over and push to the upside, all right? So if we drop our fibs on this from the low, bang, AB boundary, sitting at a 38.2 retracement right now, and we'll see, right? Do we get price to continue to push higher, or do we get just a pullback and a continued move down back to this daily support level? Okay, we get a move down to the daily support level. So right now we're getting some consolidation, price trying to turn over. We saw on the DXY, we're getting a potential retracement to happen. We got a break of that trend line, right? So look to see if we get this. So that's the daily perspective. We drop to the 4. Drop to the 4, right? And we'll look at this from 2 directions. If we're able to, let's see, we'll drop our fib from the bottom to the top, right? Well, let's go back, right? So in the daily time frame, bias currently is, bias is overall bullish, right? But we're in a retracement. So we're in an up retracement zone, right? We're in an up retracement zone. So we're looking to see, do we get potentially a pullback and a continued press deeper into this retracement zone, right? Up retracement zone. So we're looking to see if we get some action like this to push deeper in this retracement to then set us up for a nice longer move to the upside, okay? Or if price wants to come down and take out the 8, could potentially do that as well. But this is what we're looking at, right? See if we get this retracement and then see where that retracement leads us, okay? So overall, bias is bullish, but we're in an up retracement zone currently, okay? So we're looking at retracements multiple time frames. So back to this 4, okay? Those taken out. We're just going to map the fibs all the way through until they expand, right? So here we go. Price came up, price pushed down in this up retracement zone on the daily, took out your 4-hour fib, right? So we take those out and we flip the fib from the top to the bottom. Bang. So here, right, this is what you saw Benny post. AB boundary, shallow retracement, price pushed down to the 118, 127 zone. Okay, this is what we saw when we first pulled up the chart. Okay, we got a slight break here and we're just moving sideways, right? Moving sideways, so I'm gonna adjust that to the outermost point. We want to get a nice, strong, convincing bullish break of this trend line. Okay, I want to get a nice, strong bullish break. So that's what we're looking at from a 4-hour time frame perspective. Love to see a trend line break. Bang. And then give us a nice move to the upside, right? From a 4-hour time frame perspective. And then as price gets to these higher levels, we'll see how the market responds to see if we get price to turn over and then push to the downside to give us a deeper push in that daily up retracement zone. Okay, so looking for price to push to the upside and give us a retracement from a 4-hour perspective. Okay, now we drop down to the 1. We'll see a little bit more detail in this. right? I'll look at it from here. But overall, same thing. Same thing. We didn't get price to push to the 118 and 127 zone on the 1 hour time frame, but we did get this shallow retracement. Price pushed down, broke the B boundary. Now, if you're trading this off the 1 hour and not the 4, right, your trend line would look like this. Okay. If you're trading off the 1 hour, this was your trend line break, strong bullish push here. And then we started to move sideways. Okay. So on the 1 hour, you got a trend line break. On the 4 hour, you have not yet. Okay. So that's going to be based on what time frame you trade off of. Okay. But this is the look. This is the look. Now, we want to see if we get this continuation. If we get that deeper retracement on the 4 hour, this 1 hour A boundary is going to get taken out. All right. So we'll go back to the 4 real quick, and we'll put our levels on the 4 hour time frame. Fib to the downside. Okay. Right. So we got 38.2, 61.8. I'm sorry, 50%, 61.8. And we'll put 786 in there. Okay. So those are your fib levels on the 4 hour time frame. Oops. We'll do this 2 ways. We'll drop those levels in. And then we'll draw that like so. All right. You can map this fib down to the 1 and keep it simple that way as well. Either way you choose. Oops. All right, so that's that 4 hour fib. We will put our trend line. We'll leave it off for now. So now we'll go back to the 1. All right, these are those fib levels on the 1 hour time frame, like so. Okay, so if you drop your 1 hour fib on this, right, that looks cluttered. So we'll slide it out real quick. These are your fib levels: 38.2, 50, 61.8, 786. So if you get back to the 38.2 on the 4 hour time frame, you're going to take out this A, and you're going to have fibs running in the opposite direction to the upside on the 1 hour, right? You hear Ben talks about all the time. You get those deeper retracements on the higher time frames. That A is going to get taken out. So that is the potential there for that A to get taken out as we look for a deeper retracement here. Okay, so keep that in mind if you're trading off the 1 hour time frame, right? So if you move that fib back on, this is that 4 hour fib, something like that. Okay, so that's where we sit. That's where we sit. Okay, looking for that retracement to happen. Any questions on the dollar Swiss in that post that that Benny made?
No.
Okay. All right, so that is it on the dollar Swiss. Let's take a look at the NZD-JPY. This one, NZD-JPY used as risk on, risk off indicator, right? Give us some insight on where we stand. Previous markup, right? This is my trend line to the upside. I said if we get a break of this weekly level, we'll push to that monthly level. And that's what we got. Didn't get the push down. So that's where we sit, right? Push to the upside, prices reversing, right? So with the yen being a safe haven, right? And moving with the dollar in some cases, we're getting that retracement on the dollar. So we're getting a retracement here on the NZD-JPY, okay? Overall, NZD has been relatively strong, okay? So we'll clean this up and we'll mark it up from the top to the bottom, right? Repetition is the mother of all skill, right? So going over this and over this and over this is extremely important, especially as you're new in the space. Most people heard me say as I was getting started in trading, I would mark up my charts every day. Not saying that you have to be that obsessive, but I was. I would literally clear them out and remark them just so I could start to see support and resistance levels, so I could start to understand this better. But the key is repetition consistently, right? And getting to understand what it is that you're looking at, right? And that's where your questions come into play. You got to ask the questions to get clarity on things that you don't understand, so that as you are doing your markups, you're doing it in a way that if you want to do it the way that we teach, right? Being an inner circle member, you're able to do that. Okay. And you understand the principles behind why we do it the way that we do. Okay. That's the key, is understanding why we do it the way that we do, so that you can then replicate it. Right. So the repetition is key. Understanding what you're doing is also key, so you're not just out here willy-nilly. Okay. All right, so that's a monthly level. Back to the weekly. Got a swing high here. Swing low. Swing low, swing low. All right. Like that. Okay, so it's a weekly level. Bang. Okay. Like so. All right. So what can we tell from this, right? Price pushed up, created a new swing high on the weekly. Then we got price to push back down, previous level of resistance, created a new swing low on the weekly. And now we're pressing to the upside, right? This candle closed last week higher, right? Now we're moving back to the upside. That gave us our swing low with the close of this candle last week, right? New week starts. We've got a lot of indecision here, right? But overall, price is pushing higher. Okay. So that's from a weekly time frame perspective. New swing low there. Okay. So as you now drop to the daily, this is what we see. Got that weekly swing low there. We got daily support just below that. Okay. Got resistance, support right here. Zoom back out. Okay. Overall, we see, right, price just been pushing to the upside, just pushing to the upside. And there. Okay. All right. So we got those levels in. Now let's look at it. Okay. Pushed off this level here. That's a weekly level. Take that out. Weekly support. Now we're pushing back, right? Tracking towards this daily level of resistance. We'll see if we get there, right? Got a level here, pushing up, right? Pushing up, retracement. So let's zoom out and look at our fibs. Starting at the swing low. Bang. Now, this is what we see. AB boundary, shallow retracement, retested that B boundary, weekly swing high, pushed down 618, just shy of the 618 retracement level, right? And created that new swing low on the weekly. Now we're getting this press back to the upside. So we're in an up retracement zone, right? Up retracement zone. So now the question is, do we continue higher, right? Continue press to the upside, or do we press down? Now, what we could see, seeing as the dollar started to pull back some, we could see a retracement happen here, right? And could see a pullback for then that continuation up. Okay. So that's what we could see. So on the lower time frames, we want to see if we get a break of this trend line and press to the downside. Okay, that's what we want to see. So as we continue to move through, get to the 4. Okay, get to the 4, we zoom out. And we're going to look at it the same way. We're going to start at the low, run our fibs to the upside, and see where it takes us. Okay, so here on the 4, we got a new AB boundary, 118 to 127 zone, price pressed down, 50% retracement, that weekly support, and that was that push. Okay, so we got a deeper retracement already on the fib to the upside, right? So now we want to see what occurs again on the lower time frames, right? So your daily and your weekly, your daily and your 4-hour unit up retracement zone, right? Up retracement zone. We're trying to press to break out and push to the upside. Okay. So now as we move to the 1, our bias on this overall is bullish, but we know the market moves in waves and we're looking for a retracement to occur so that we can continue moving to the upside, right? So here on the 1, if I'll show you how we got here, right? So if you run a fib from the top to the bottom, right, you see your fibs get taken out. You see them get taken out with price pushing to the upside. So price took out that A. So again, we flip the fib from the bottom to the top, like so. And here we sit. Very little retracement here. Fresh AB boundary, shallow retracement, 118, 127 zone, you got your swing high to form, price is pressing to the downside. So now we drop our trend lines in. Drop our trend lines in like so. Like so. And like so. And one more coming to the inside, like so. All right, getting through the highest point. We got a question.
Okay, so with the fibs right now, I don't see, like, how come the B is there, but like it skips all the other 3 highs that are right there?
So let's see. That level was there. It's a good question. That's a good call. That's a good call, Alec, because technically it should have been either this high or this. It should have been this high. Mm-hmm. That's a good catch. So sometimes with the algorithm, there is a little glitch. Mm-hmm. So that's what would have caused that. It's a good eye. That's a good eye. So if you're drawing the manual, say it again.
I see it's the same zone, but I was just wondering.
Yep. That's a good catch. Right. So
Ryan, Ryan, did that low at the C catch that?
Did it catch that
level to the pip?
Let's see. That's a good call too, Benny. Let's see. 80471. You're right. It did come short. So if we take this off, it did come short. Oops. It might have been like 1 or 2 pip difference. Yeah. That is what it looks like. I can't see the number here on this level. But that's that could have been it too. Came just short of that 8.6 level by a pip. Yep. So that could be it too, Ella, right? It came short of that 8.6 level, just barely, which then pushed it to that 7.86 level. You're welcome. Good call, both of you. Appreciate that, Benny.
Yep.
All right. So that's where we sit, right? So we got our trend lines moving to the upside, like so. Right? You've got your aggressive trend line coming here through the highest point, not taking out any wicks. You got your swing high, you got your trend line break. Okay. So now we're looking for this continuation down, right? Looking for this continuation down, right? We said we're in that up retracement zone on the 4 and on the daily. Okay. So now we want to see, do we get price to continue to press down, give us a nice deep retracement to a 618 level, and then give us that continuation to the upside. Okay. NZDJPY. Any questions on this one? All right.
No, but it was good to see that you kind of knew that price would push down now that we got to the 1 hour. When you were saying about price will pull back, and I was like, why would it pull back? But when you get to the lower time frames, you really see it.
Yeah. And it's just looking at the price action, right? So if we go back to the higher time frame, if I can, let's do this. Let's save, reset. So if we pull these out for a second, and we just look at it from that higher time frame, right? So from the 4, we've gotten these smaller retracements here, but price has been moving pretty strongly to the upside. And once we broke out of this resistance level here, right, push up, now, right, price will come back and retest that or even push deeper, right? So it's been a strong move to the upside. All right, so if you run your sub fibs on that, that's what that looks like as well. So with that strong move, you're saying, okay, at what point do I get a retracement? Okay. And then also combining in the DXY in that as well, right? The DXY is pulling back. So if the DXY is pulling back, there's a good chance that the yen could also be, could gain a little value, right? So if that occurs, that retracement would then be likely. That makes sense?
Yep, thank you.
You're welcome. You're welcome. All right. Didn't get through a ton of pairs, right? But hopefully you guys were able to see my process. I love you guys' feedback on if you like the lines, if it's cleaner for you and easier for you to follow than the zones. But you're able to see my process, right? From top down, how I get to the ideas and understandings that I do, how we do, right? As we go through this process of top-down analysis, utilizing support, resistance, trend lines, and the Fibonacci sequence. Any questions before we wrap it up for the day? No? Benny, so much cleaner and easier to see. Appreciate that feedback, Reese. Benny, you got any thoughts before we close out, man?
No, sir. Just look forward to seeing everybody this evening, 9 p.m. Eastern Standard Time.
Yes, sir. We'll be back at it tonight, everybody. Thank you for joining. You guys, excuse me. Thank you for joining. You guys have an awesome, awesome Tuesday. And we will see you guys tonight, 9 p.m. Eastern Standard Time for the Asian session with Moss and partner, Mr. Benny Allen. Have a great day, everybody. Peace.
Bye.
You're welcome.
Yeah.